Hello and welcome. I'm Blair Blackwell, and this is the Daily Market Brief. Let's catch up on what's moving in markets today. Good morning. It's Wednesday, 17 December, London Open Prep. Here are the key themes shaping the open. UK inflation cooled more than expected, ahead of the Bank of England's meeting, and Japan heads into a pivotal central bank decision, with bond yields surging and the yen under pressure. Starting in the UK, November consumer inflation eased to 3.2% year-on-year versus 3.5% expected, with core also at 3.2%. It's a softer print, but still above 3%. And analysts note services inflation remains elevated, which keeps the disinflation story incomplete. Markets were already leaning toward another Bank of England rate cut tomorrow, and today's data nudges in the same direction, even if the messaging on stickiness won't vanish overnight. Meanwhile, in Japan, the policy backdrop is front and center. 10-year government bond yields have climbed to their highest since 2009, as investors brace for the Bank of Japan's last decision of the year, with talk of another rate increase. Prime Minister Sanae Takaichi is arguing for proactive fiscal support, and a former BOJ deputy governor is warning against hiking too soon. The tension between tighter money and looser fiscal policy is spilling into markets. The yen is weaker into Europe, with dollar-yen back above the 155 handle. Turning to currencies, the US dollar is attempting a rebound. A more neutral tone from the Federal Reserve has steadied the greenback, even as softer US jobs data keeps the debate about the timing of future cuts alive, with some analysts flagging risk of earlier easing in 2026. That mix has weighed on the Australian dollar, which extends its slide and has lifted dollar Swiss. One outlier in Asia is India, where the central bank intervened in spot and offshore markets, knocking dollar rupee down more than 1% from a record high. Commodities are balancing those crosscurrents. Gold is firm, pushing towards 7-week highs as signs of a cooling U.S. labor market support demand for defensive assets, even with the dollar firmer on the day. European equities, for their part, are set for a broadly flat open as investors await the central bank run-in. For market tone and sectors, softer UK inflation is supportive for gilts and takes some heat off sterling at the margin, while a firmer dollar and rising Japanese yields are a headwind for the yen and for higher beta currencies like the Aussie. The bid in gold underscores lingering macro caution, despite resilient consumer data in the US. Looking ahead, the calendar is relatively quiet now that UK inflation has landed. Focus shifts to the Bank of England tomorrow and the Bank of Japan later this week, alongside any US labor updates that could refine the path for Federal Reserve policy. I'll be watching the pound against the US dollar, looking for a modest downtrend if the softer CPI keeps BOE easing expectations intact. I'm watching dollar-yen for an uptrend into the BOJ as yields rise, while staying alert for whiplash if the BOJ surprises. I'll keep an eye on the Aussie against the US dollar, where a firmer greenback and risk caution point lower. Dollar rupee bears watching for further downside if the Reserve Bank of India stays active. And I'm watching gold versus the dollar for a continued upward bias if labor data keeps cooling and real rate expectations ease. The takeaway: markets are leaning into policy inflection points. Cautiously optimistic, but sensitive to every data point and central bank signal. That's it for today's edition of the Daily Market Brief. Thanks for listening. I'm Blair Blackwell. This podcast is for informational purposes only and does not constitute financial advice, trading recommendations, or investment guidance.